The world's on fire more than I can handle. Tom, let's just start off with the punch here. All right. Is crypto over? Is it done?
It's done, Peter. It was a nice ride. We tried to keep this Ponzi scheme going for as long as we could, but it's gone. So now go back to your job, get a second one, get a third one, and you work to the grind. You're going to own nothing and be happy. Haven't you heard? Nightmares this week, Peter. The last couple of weeks has been pretty nightmare for a lot of people.
Hey, do me a favor, Tom. Increase your volume just a little bit. I want to hear your full booming voice. Just a tiny bit.
Unlimited power. Is that better?
Much better. All right. Here we are, Jumpstart. I'm your friendly neighborhood dumb guy, Peter Hartman, and we have our crypto guru here, not a guru, Tom Hartman. How you doing, Tom?
I'm feeling a little bit better now that I closed my positions out. And so you just told me a little while ago I was shorting a bunch of stuff in crypto. If things go down, you short it, and the positions just moved completely against. If I had not closed my positions, I would have lost everything. Rough, Peter.
Oh, okay, but you told us. Okay, let's get this off the top. Is this the bottom for Bitcoin?
So I don't think so. We're at a level. So right now, Bitcoin last night hit 25,000, and this is lower than a lot of people thought it would go. And even Raoul Powell, who we quote a lot, said that he didn't think it would go lower than 30,000. So it hit 25,000, and the question is, now you got to listen, Peter, to the people who said, "Hey, it's going to go down to this level," and you got to see what they're saying now, right? Right. It's
The
all
guy
nice
with
to listen to
soloids.
the exactly. It's all nice to listen to the people who had rainbows and whisker tails, just like I did last year. But when the market kicks you in the teats, you got to switch it around. You got to figure out what's going on, what you did wrong, and pivot. So we talked about it before. Bitcoin is correlated with financial conditions. Better said, the amount of money sloshing around in the world is directly related to the price of Bitcoin. And what we're seeing now is that that's being taken out. That money is being pulled. It's just through inflation, through central banks, through all kinds of supply chain issues. It's money is tight. Everyone's feeling it. Grocery bills are high, and rent is going up, and oil is crazy. It, it, People's pocketbooks are tight. I mean, they're tight. What do they sell? They sell things that work, and then they sell things that don't work. And so that's why we're seeing. We saw crypto right peak in November of 2021, just as this problem started to happen. Then we saw the S&P, the United States stock market, peak. I think a month after that, and then things have been pretty much going down ever since. I mean, if you weren't betting on wheat, because of the Ukrainian war, you you've been losing money. Even gold's not even doing much. So liquidity conditions are sour. Not enough money sloshing around, and we're going to see the only thing that's going to make crypto turn from here, just like any of the other assets,
Mhm.
is when the money spigots get turned back on. When there's a relief and there's an expectation that in the near future more money will be pouring.
And that's when the Federal Reserve lowers interest rates.
No, as we found out, the Federal Reserve is just a it's just for show. There's just a figurehead, right? The market actually tells the Federal Reserve what to do, and so basically, uh, inflation has been so high, and the Federal Reserve is supposed to be handling inflation, and since they can't do anything about the causes of inflation, right? Wars in different countries, China being shut down, supply chain issues. They can't do anything about that. Well, if you can't modify the supply side of an equation in order to modify prices, you have to modify the demand. What does that mean? You gotta hobble people in the knees, and you go, "You're not going anywhere." All right? We're taking your job, we're taking your money, we're taking your opportunities. You stop. You're gonna eat food, and you're gonna keep your Netflix subscription, maybe, and that's it. And you're gonna get your stuff back when we get inflation under control. You got it? This is basically what the Federal Reserve and the central banks are saying.
So
So
is this
until
happening because of the recession?
it's hard to talk about that because when you say recession, like what do you think of recession? What does that mean
Recession,
to you in your life, in your daily life?
it means 2 quarters of no
Negative
growth.
GDP growth. Yes, Peter. Very smart. Very smart of you. Aren't you precious?
Recession to me means I mean, I don't know. I've never once in my life walked around outside and been like, feels a little recession-y.
Yeah.
Doesn't mean anything to me really.
You know why? Because you're not an entrepreneur who has 80 employees, 1,000 employees, and millions of revenues and products that you have to buy and inventories you need to build up. We're smart. We didn't do any of that stuff. That's great. So we don't have to worry about, like, I guess we'd have to fire Jim today. Jim's been
Oh
nice,
my
but
god. Poor Jim.
Jim costs a bundle. And so recession is when recessions when people spend and go down. That is harder to get credit, to get loans, to get credit cards, stuff like that. And when people's jobs get lost. So unemployment goes up, credit goes down, and spending goes down. Activity goes down. And so
So that doesn't hurt the crypto markets?
it does, right? So the crypto markets are it's people with disposable income that put money in there. Well, it's people with disposable income, so retail investors and institutional investors who are putting money to work in order to make money on price moves. And so, as far as regular people are concerned, or what do Americans politicians call us? Ordinary folks.
Ordinary.
Ordinary
That's
folks
right.
like you and me. The people who shine our shoes, the people who pour our drinks. Ordinary folks. They they'll only put their disposable money into something like crypto if they have disposable money. You cut that off, right? You double gas prices, triple gas prices, double the cost of food, increase the price of rent. Well, all of a sudden, they don't have that money there to flow into it. So it makes sense that crypto then would go down. And in fact, crypto is even more sensitive to the whole thing because it's far easier for you to sell your Bitcoin right away than it is for you to liquidate part of your 401k or your stocks. So that's the situation we're in right now. And so that's why we saw the weakness in the economy. I should have seen this back in our videos back at the end of last year. That weakness was showing. I didn't want to believe it, right? I wanted to believe that it was just going to be a short-term blip and that the Federal Reserve would turn on the money spigots. And I think it would have happened, but for, Putin, that dang rascal. He really put a hamper on things. He really changed
Yeah,
the course of the near future.
that's right. So, okay, a month ago, we stream Crash Proof: How to Profit from the Upcoming Crypto Collapse.
That's right.
Is this what you were predicting?
Yes. And so it hasn't collapsed as far as it will yet. So we should just talk about this. So we had a Peter. Do you remember Lehman Brothers and Bear Stearns?
Hmm.
You do?
Yeah, they went under because of the global financial crisis. They were the scapegoats or something.
That's right. Very good. You have been paying attention. That was
I
quicker than
watch
the other one.
movies. I watch movies about the stock market.
That's right. Margin calls and such. And
That's right.
so the when things really get shaky and there's problems with the financial plumbing and there's not enough money sloshing around, well, the players who have taken the most amount of risk, they go down first. Like that's where the cracks show up, and then boom, you could have things blow up. So you get
Mhm.
hedge funds blowing up, you get banks blowing up, you get institutions blowing up, you get countries defaulting, you get all kinds of problems like this. And so in the global financial crisis in 2007, 2008, it was Bear Stearns and Lehman Brothers. In believe the August of 2007, they could not meet their obligations, and they tried to get solvent by borrowing money and getting other people to bail them out. It didn't work, and they crashed, and it caused a systemic shock. Right, we won't go through all the details of it, but we've talked about before how money is pyramided on top of money. Debt is pyramid on top of debt in order to get more debt. And
Mhm.
so once that collapsed, all the things that were tied to it, namely the subprime mortgage market, collapsed with it. And it was pretty brutal it took about 10 years um, for the recovery in the market. Was it 10 years? It took a number of years. And so what happened is right now it looks like we just had a similar type of event with Luna, right? Do you know what Luna or Terra Luna is?
Stable coins.
Yeah. So in the crypto market, everybody knows that there's Bitcoin, there's stuff like Ethereum. You might have heard of Cardano, stuff like that. These are coins that represent a certain type of value, and they might go up and down depending on the in value and price, depending on how much people want them and how much is supply circulating around. However, what happens if you have some Bitcoin and you don't want to transfer it and sell it off and put it into your own bank account, but you do want to have it stable in case Bitcoin goes down, in case later on you want to buy something else, in case you want to take out a loan or whatever it is. Well, there's this type of crypto product called a stable coin. And this stable coin, the stable coins that we're going to be talking about here, are pegged to, let's say, the American dollar. That means all kinds of machinations are happening in order to make sure that the value of that cryptocurrency, instead of going up and down with demand, is stable one for one with the American dollar. And as you can imagine, it's very useful to have a stable coin because as you're navigating within the crypto system, you have a unit of account that is exactly the same or near exactly the same for everybody who's involved in the space, right? And so if I have some comic books and I want to sell them for dollars so that I can give the dollars to you so that you might be able to go buy a Tesla, right? You we need that unit of account or that medium of exchange to be able to compare what one thing is worth with another.
Mm-hmm.
And it's for safety too, right? If you think Bitcoin's going to crash, you go, okay, well, I'm going to convert my money into a stable coin, and it'll be safe over there, and I could ride out the problems. Well, it turns out these stable coins aren't exactly as stable as we would like them to be. One of these is called
This is
Terra.
like getting store credit when you return something and then the store closes down. And you're like, but all my Radio Shack points are gone.
It's more like when you collect air miles. And you're like, I'm collecting these air miles because they say I can get an iPad, right? I can get an iPad Pro with 50,000 air mile points. But then it turns out there's a problem with the system, there's a problem with the points, whatever. They go, you can get a bobblehead. And you're like, excuse me? I've been saving up this stuff for the last 10 years. You tell me I get a bobblehead? Yeah, that's what it is. So that's basically what's going on here. But the problem is in that ecosystem in the crypto ecosystem, there's all this, there's a type of there's Ponzi schemes that happen in there. There are things like the subprime mortgage equivalents that are happening in that state. And so that when that stable coin unpegged, tons of people started losing massive amounts of money. They
Okay,
started
so the crypto market was turning down. People took their money out of Bitcoin, out of different things, put them in stable coins in order to be safer, ready on the sidelines to get back in.
well, that's a sad story. There was two groups of people. There's one group of people who they were doing the most risky thing you can imagine. They were leveraging up. They were taking out loans. They were taking out loans to then buy something that turned into an asset and taking out another loan on top of that, and doing that again and again and again and again and again in order to make as much money as possible. Like really Bernie Madoff style, but on crack. And then there's other people who were using a stable coin and they were trying to be safe. They were like, let me not be safe. Let me use a stable coin that stayed pegged to a dollar. But that stable coin, the way that stable coin, this one particular one called Terra, the way that it stayed stable is that there was another coin that the people were using in order to leverage up and loans and all that, and they were using those two to balance each other. You would
That
buy
was
and
called
sell.
what?
That one's called Luna, and that Luna token would be bought and sold in such a way as to balance off the value of the peg, the stable coin. Now, I'm simplifying this because you and people like you don't really understand the intricacies of these networks, and so I have to dumb it down, Peter. I have to make it a little bit more palatable to you, right? So you let me know if I'm losing you anywhere. I know I'm using big words like programming and things like money, so you'll stop me.
All right.
But basically, the Luna coin was being the stable coin was being generated. The stability of it, the peg, was matching. There was all kinds of machinations that were happening. Well, it turns out BlackRock and Citadel, two investment firms and hedge funds,
those lovely people.
those lovely people who Citadel, who got screwed with the GameStop squeeze. I guess they had it out for retail investors. Figured out, if we can they can do what's called a short attack. They could do an attack on the stablecoin and make the stablecoin wobble in value. So instead of being 1-for-1 with a dollar, they can make it 90 cents to a dollar. They can make it 80 cents to a dollar for a short period of time. Well,
Should I read the thing that you shared in our group there, that explained the situation?
yeah, you can give it a shot.
All right. Let me get it here. So yeah, okay. So you shared this. This is a. You want to talk about the group or?
Yeah, absolutely. Actually, while you do that, I'll share this link inside of the group.
We're in a blockchain and cryptocurrency meetup group. Here we are on Telegram. It's a pretty fun group to be in. And Tom shared a post that was, it says here, forwarded from Anna. I don't know where you pulled this. It doesn't look like Twitter. It looks like Discord.
I believe it was shared from Charles Hoskinson, but we don't know if it's true or not. Certainly, BlackRock and Citadel deny that it's true. Of course, they would.
All right. So we don't know if this is true, but a pretty interesting story. BlackRock and Citadel borrowed 100K of Bitcoin from Gemini. 100K, 100,000 Bitcoin. How much is that? From Gemini. It appears in their loan book. They swapped 25K of that Bitcoin into UST. This is the stable coin. This was all done quietly in anticipation of the attack. When the time was right, they called up Do Kwon, I think I'm saying that correctly, at Terra Foundation and said they wanted to sell a lot of Bitcoin for UST. As it was a large trade, they told him they didn't want to move the market and asked if he would like to buy their large block of Bitcoin at a discount for UST. Daquan took the bait. He gave them a huge chunk of UST, thus lowering the UST liquidity significantly. So, explain that.
So, in order for UST to stay at a dollar, there's constant buying and selling that's happening um, around that token in order to keep it at a stable price. If the coin goes up too much in value, they need to bring it down. And how you bring it down? You sell UST. You sell the thing. And if it goes down too low, what you do is that you buy back the USD. So basically, you're always the buyer, right? The person, the organization that is creating the stable coin, they make sure that they're always the buyer and seller necessary in order to keep a price at a certain level. You can imagine it like if you had a bunch of houses, right, and there's a price for the housing market. So the prices of the houses for a certain area, let's say, are $500,000 for these houses, but as the houses get taken up, there's not enough houses for everyone, so people bid up the houses. Well, if you wanted to bring the prices of houses down, you have to build more houses, right? And
Mhm.
as you quickly build those houses, well, then people couldn't sell their houses as much. And if the value of the houses went down, and you wanted to bring the value of the houses up, well, you burn those houses down, Peter. You burn them down in order to bring up the price. Now you pay what you need to pay. So that's essentially what's going on over here, this buy and sell. So what happened is that in order to do that, there's a cushion of amount of money that's there, right? You have to have money on hand, or these tokens on hand, in order to be able to buy and sell them, to buy and sell in order to keep the peg. Well, what these attackers did was that they convinced the person who was in control of it. They go, "Hey, look, hey, psst, hey, we love your project. We love your project. We love it so much. Look, we have a pile of cash, and we really want to buy into your stuff, but we're worried that if we put too big of an order, we'll be a big whale coming in. We're going to move the price too drastically. So as a favor to you, Do Kwon, as a favor to you, how about you just let us do the thing with you. We'll do the trade with you. You provide the liquidity for us. You're sitting on all this money, right, in order to keep your stable coin pegged. How about you just give that? You just give that to us. You just give it to us, and then no one will know, right? It'll be quiet exchange." And Doquan's like, "Great, no problem. Yeah, we'll do that." He shouldn't have done it. He goes, "Yeah,
All right.
well, we'll do that." And so then when he pulled the pool out, that pool was not there. He thinks he's just to wait a while for in order to replenish it. And the other people who bought it, they sold everything. They sold Bitcoin, they sold UST, they sold it all. And when it hit it, the peg just completely wallowed and broke. And there was like an earthquake that happened. So if you imagine you wake up one day and the value of your just imagine you have dollars in your account, and one day the value of it drops drastically. It just drops by 30%. You're like, "Excuse me,
Mhm.
what? My money just dropped 30%?" Well, there's going to be a certain percentage of people who don't want to take the risk that it drops any further. And so what do, Peter?
Panic
That's right.
sell.
They sell. Exactly. And when they sell, they're selling at any cost, which brings the price down even more, which causes the people who are on the fence before to sell more. And you get into this vicious cycle of selling. And it was brutal. People lost. Peter, I mean, I'm joking around, but you've seen me over the last couple of days. It's just been brutal for these people. Like, we weren't in that, but a lot of people lost everything. They lost everything and more. And some of these people, like, you're like, well, just declare bankruptcy and that'll be it. But some people lost their life savings. Some people lost their home. People lost. And what do you go tell your wife? What do you go tell your husband when you tell them I lost everything? What do you tell your kids when you say I've lost all your here's money for school? And like, what do you say? So the rash of suicides has been, you know, depression level, like depression era level, just people killing themselves. It's just been
I feel the
brutal.
same way about this as when the Red Wedding in Game of Thrones, and you're like, you hear the music playing, I mean, everybody's gonna die. Like, everybody's getting taken out right now. It's pretty crazy. So, as it was a large trade, they told him they didn't want to move the market and asked if he would like to buy their large block of Bitcoin at a discount for UST. The Quan took the bait. He gave them a huge chunk of UST, thus lowering the UST liquidity significantly. At that point, BlackRock Citadel dumped all of the Bitcoin and UST, causing a massive slippage and triggering a cascade of forced selling in both assets. The real problem was BlackRock Citadel knew that Anchor, which holds a lot of Luna, was a Ponzi scheme. They offered 20% staking APY, for Christ's sakes. And this crash would trigger more withdrawals from Anchor than Anchor can repay. These forced withdrawals and selling would trigger a massive sell-off in Luna, thus further breaking the dollar peg, and wrecking the market further. BlackRock and Citadel can now buy the Bitcoin back cheaply to repay the loan and pocket the difference. Meanwhile, billions of longs in Bitcoin were wiped out. This was pure market manipulation. Look, cryptocurrency, Bitcoin, is a disruptive technology. And ever since I heard about it, ever since I understood it, I realized that an attack was coming. People, governments, and organizations not just sit by while the rug gets pulled from under them. They got plans going, and it seems like maybe this is part of that. It was a strategy in order to wreck the markets. And
Well, we don't need to go so far as that. I mean, that could be the case, but in the financial markets, this sort of thing happens all the time, Peter. Just all the time. Like we saw last year with the GameStop squeeze, right? And the reason that was notable was because it was retail investors that were doing it, right? They're like, "Oh well, we learned from you, so we'll do it to you." But this happens constantly, where one company will short some other company or manipulate some other stock in order to make millions and billions of dollars. It happens all the time. It's just that retail investors weren't necessarily prepared for this. Now, in the previous cycle for crypto in 2017, 2018, this sort of thing also happened. Not this exact thing, but it had its own collapse. Like the collapses happened for all kinds of different reasons. And .com, right? And the .com crash, there were tons, I mean, thousands of companies that were just useless. They were just these schemes, right? There were the stories of people who would, be in their basement, register some company with some domain name that didn't make anything, listed on the stock market, and sell shares for millions of dollars, and then the company did nothing. Like, of course, it would crash. But and in the subprime, but it doesn't mean that there aren't tech stocks in the .com crisis that weren't valuable, right? Even though Amazon
Amazon.
dropped to whatever $6,
Mm-hmm.
$3, doesn't mean that Amazon wasn't valuable. Just because Microsoft dropped to such a degree that it took 10 years for it to get back to its previous high doesn't mean it wasn't valuable. There's things that are still valuable, that the technology that they're doing, they are bringing innovation into the space. It's just that when the tide goes out, that's when you get that to actually see, you know, who's wearing pants, which projects are actually valuable. Same thing happened in the global financial crisis, right? The subprime mortgage crisis was this bubble that popped, but that doesn't mean that the houses weren't valuable. Well, some houses were not valuable. Some houses were too high price for what it was, and the prices came down to match what they should be in that area. But it doesn't mean that a house is not valuable. And so similarly, like right now, what's going on is that the things that had problems, the projects and the exchanges or what have you that had problems, solvency issues, those guys are suffering and they're going to collapse. And we sort of want that to happen, right? You want that to clean out because in the next round forward, the ones that are still there are more likely to be valuable and will actually see what is it about this crypto space that can actually change the world in the same way the internet changed the world after the dot-com crisis.
Yeah, it's kind of a good thing. It's a cleansing fire that's getting rid of all the schemes and the things that people might think have value but don't have value. So
Just, if you ever hear someone says you can make 20% interest rate on borrowed money, and they don't explain to you where is this coming from, or if the explanation, well, it comes from the next guy. This is what I didn't understand, Peter. It wasn't like they hid the Ponzi scheme. They go, look, you deposit your money in here. We'll give you a 20% interest rate. And you go, how do you give me that 20% interest rate? Well, you're going to get a percentage of the fees of the transactions of that network. You go, okay. So the network, it has people who are, producing something, creating some sort of service, whatever. No, it's just other people who put their money in there as well. Wait, so I'm being paid out with the money that comes from the people who come after me? Yeah. And what are they paid with? With the money of the people that comes after them. And so on and so forth. And what happens at the end? Oh, don't worry. The 20% return is so good. There'll always be new money coming in. I mean, that's how you teach what a Ponzi scheme is. That's like the definition of it. I couldn't believe it when I had heard about it back in the day, and people were like, because even when crypto was going down in November, right? Bitcoin was going down in November. This thing was still going up, and people go, "See, that's proof that it's valuable." I was like, "There is no chance I'm touching that thing. Not even close to it."
I was on Reddit and people were like, "No, don't be stupid. Just you can get 20%." Because I was getting what 5% from Cardano, and people were like, "Hey, just get 20% with the stable coin," and I was like, 20%, 20%.
20%.
It's like going to a Lexus dealership and or used car shop, and you're like, "This is a great car. How much? 500." You're like, I'm not buying that car.
Exactly.
What do you mean 500? It's great. Everybody loves it. We've sold 1 million of them. I'm not buying that car for $500. Like, why the
Well,
hell?
the crazy thing, it
Too
wasn't
good
like,
to be
okay, put
true.
$100,000 in this thing, you're locked up, and there's no guarantee you're gonna be able to get that money out. It's a risk that you're taking, and or in order to get paid for that risk, which is what an interest rate is, Peter. The interest rate exists because it says this is a measurement of the risk you're taking. So someone says, I'll give you a 2% interest rate. It means that you're going to have a lesser risk. That's the idea of it. And someone says you're going to get a 20% interest rate. It means you have like a 10 or 100 times more risk. That's what it means. And so they would put that in, and then they would get this asset that says this represents your claim on this money that's giving you 20%. And then that thing that they would get, they could then collateralize, which means take a loan out against it, because you could say, well, this debt that I have is worth $100,000, and they would take that and get another loan on top of that, and the deposit of that in order to get it. So, oh my God, Jesus Christ. What a terrible idea. Now, I know what you're thinking, Peter. It's what a lot of people are thinking. If this is Ponzi scheme, then isn't Bitcoin a Ponzi scheme too? Isn't Bitcoin only valuable because of the money that comes in afterwards? Isn't that what it is? And
No,
the
Bitcoin serves a function. It's
and the but
useful.
the answer to that is no. And we just leave it at that. It's nothing. We don't have to talk anymore about it. That's just what it is. It isn't a Ponzi scheme. And if you need any explanation, go listen to Michael Saylor for the next 17 hours. I recommend that you sit in a room that's too short for you to stand up in and too narrow for you to lie down in. Big white lights, maybe some blaring music, rock music works very, very well on loop, and you'll be convinced.
Look, there's no
You'll see why.
interest. There's no staking. There's no interest with Bitcoin.
Yeah, that makes it better, right?
If the higher the amount of interest you get indicates a higher risk level, then zero must be great.
Let me ask you, how would you, because I know the answer to it, but how would you differentiate Bitcoin, let's say, from this Luna thing, from the Ponzi scheme?
Um, well, to me, Bitcoin provides a practical use. Like it's useful in a way that gold is useful, and I don't see Bitcoin as a coin or a currency like these other things. I see it as a store of value. So, I mean, I'm sure people can play games with Bitcoin, but you say a house is worth a house. Well, a Bitcoin is worth a Bitcoin in the sense that it could still serve the function of whatever it needs to do despite the price, no?
Exactly. That's if something is an asset, it means that it's valuable in and of itself. But the difference with and this is how I think about all the cryptos that I find to be actually valuable, is
Mm.
that it connects the network connects the money network connects to practical networks, right? So we use dollars because when we go to work and they pay us in dollars, we can use it to go into other networks, right? We can use it for entertainment, we can use it for food, we can what have you. This it connects, it bridges to these other networks, and the more that it bridges to other networks, the more valuable that thing becomes, right? It doesn't mean that your currency, your dollar, doesn't necessarily go up in value because, or rather, go up in value because it's connected to more people. What it is that as it connects to more people, that thing finds the value that it should be at, right? And so
Hmm.
it sort of finds its level, and the ability to connect to different networks allows information to pass through your workplace to the money to the grocery store. There's a connection of information, a flow that goes through the entire thing. And so
Hmm.
when you have things like Luna, where no one's setting up, Luna payment rails so that you can pay for your coffee in Luna. No one has set it up. No one's saying, "Okay, I'm going to get paid in Luna for my job." Or that wasn't the mentality. The mentality was the value of it was that you can lock it up in this way, you could stake it in this way, in order to get a yield on it, and what you were getting back was just more of the same thing that you were getting. And so it wasn't connected. There was no outside connection to any network. Now, if there was that, then I would say, okay, there's a possibility for that to work. So, for example, bonds, government bonds, you might consider that to be a Ponzi scheme. The government is just creating it out of nowhere, right? The government creates this debt out of nowhere, sells it, says we'll give you a coupon, an interest on this for whatever period that the bond says, and we guarantee that we will pay you back. How do you guarantee that you pay you back? Well, we'll print more bonds and give you that money, right? But
Hmm.
because the bonds are, and that in that way, the different bonds that exist for the different sovereign nations around the world are worth differently, right? A Zimbabwe bond is not going to be worth as much as an American bond because
Hmm.
they're not connected to the network in the exact same way. Whereas American bonds are as good as cash; they're better than cash because they're far more liquid and you can do more things with it. And so there's a value to them. There's a premium to American bonds that people are willing to pay versus something else. And so Bitcoin to me has that value because it's not trying to make its the price appreciation of Bitcoin is a byproduct of its usage, not the purpose of its usage.
So, is this the bottom for Bitcoin? What's your lower range estimate for the price of Bitcoin, and how long?
Okay, so I've built different signals in order to tell me, one, what is the state of the money, the dollars flowing around the world or in United States. How much money is flowing around? So what's the state? So when there's a drought, right, and it makes it more likely that financial assets will be weaker. It doesn't mean they will go down, but it means that they'll be more vulnerable to a shock, right? There's not plenty there. And when there's abundance, the chances are that the financial assets will increase in value because there's more liquidity, there's more money inside of the system.
Hmm.
And so the question is, one, what has, and then I have another thing that I built that tells me not in general but specific for a given asset, and then I do an analysis on the different assets that I pay attention to. And so the conditions that have led to not just a drop in Bitcoin. I mean, Netflix down. What is it? Netflix down 60%. Stock market's down massively and falling. You know, ARK is down. Like these things, there's a huge problem going on right now where financial assets are dropping. And so the question is, what were the conditions that led to that? and had they alleviated? Well, the conditions that led to that was the inflation that we're experiencing, the increase in prices for things that causes people to pull back their money. We've also had the bond market, and the central banks are on this path to increase rates. So we won't go through all the details of it. We talked about in different videos that if interest rates go up, the cost for someone to borrow increases, and our economic system is built in such a way that it requires interest rates to go lower all the time because people take out new loans to pay previous loans. Sound familiar? And so if people can get those loans, then there's a problem. There's not enough revenue for, not enough spending for the populace, not enough investing from corporations, and so you have this tightening of financial conditions. You get this drought inside of the financial markets, and that drought, if anything, has just started, Peter. All right. In November, the signs were there, but it's only really as of March of this year that it has really started to hit the fan. And I mean, we're just at the beginning of it. Today, we woke up and, Luna, who that was at $119 just a couple of months ago, is now at a penny. I don't even know what it's at, some crazy low amount. And so the stable coin is like dead. I think it's at 40 cents last time or 37 cents last time I checked it. But then also Tether, the stable coin, one of the other major, if not the biggest stable coin around, that one's also faltering. So that's also a problem. So these cracks are just forming, right? Bear Stearns and Lehman Brothers were the beginning of the global financial crisis. It took another 3-6 months before it actually fell completely. And so we're really at the beginning. So is this the bottom? No, Peter. And as a general retail investor, you'll know that you're at the bottom when it becomes clear to everybody, under no circumstances should anyone ever buy crypto again, right? When it becomes clear that even the diehard fans of it go, no, it's over. I'm done. It's over.
You think
Did you
that'll
not see
happen
what
for
happened?
Bitcoin?
Yes,
They're
absolutely.
crazy. They're crazy for Bitcoin.
No, I'm not saying every single person will do it.
Oh.
I'm saying that when you get to the point where the speculators are gone because they're losing money too often, and then now you're to the people who they bought it, they bought Bitcoin at 9,000, and they could have sold it at 69,000, but they didn't. That's excuse me there. And then it comes down, and then there's people's like, well, I don't want to be underwater, right? So the bad people get liquidated out, and then there's smart people, the people who didn't sell at the top, okay, and then there's people who's like, well, it's coming down. I don't really have any expectation that it'll go back up. It's tons of bad news. Let me just sell it now, take my profit, and then you're gonna get to the point where it's people like, well, there's gonna be money to make. There's so much more. It can go lower, so um, let me pull out my money now and I'll get back in later. Like, you just get it through all the layers of people who would sell. And once you've exhausted basically all the sellers, the price then bottoms. It can't really get much lower than that. And then that's usually where the bottom of the price is, where the people who have it left go, well, I'm not selling. I'm not
Mhm.
selling it. And so the price doesn't really go anywhere. And then that usually coincides with a turn in the financial conditions of the world, where the central banks and the government say, okay, there was enough demand destruction, people lost enough money, employment, great, employment's back up some, there's stuff for us to do, let's turn on the money spigots. And when that happens, boom, then I expect you're going to see crypto as well as tech stocks and stock market reach new all-time highs again, if not 2023, 2024, or 2025. And so you'll know it's the bottom when even you can't be convinced to buy it, right? When you
There's never
go,
going to be a point where I can be convinced to buy
no,
it. I
not
believe.
you, Peter. You're
I understand.
you make terrible decisions. I'm talking about someone who would make good decisions. And so when it's not when buying it, it's no longer a question of fear, right? Like, you're not like fearing, is it going to drop anymore, or fearing that you're missing out. It's just like, oh, it's Bitcoin. We're still talking about that. Oh God, the Bitcoin people. When it's that conversation, The news is not even talking about it. It's not even interesting anymore, right? We're over it. Sort of like Will Smith's slap of Chris Rock. You're sort of over it. You're on to Amber Heard and Johnny Depp now. Like once that happens, then you want to be buying.
And what price do you think that's going to be at?
14,500, I think, is the price that Bitcoin is going to hit. Well, should I pull up a chart here and just show you why it is I'm saying that? I can just show you my signals here.
Sure.
All right, so this is a chart of Bitcoin. It's logarithmic. If you guys remember, a regular chart, a linear chart, shows Bitcoin like this, just standard price. But we don't care so much about the price of Bitcoin. We care about the change of the price over time. And so we're looking at logarithmic. Basically, what we like to see is the chart go up. And as you see here, there's always these periods where there's a correction, right? There's a Bitcoin drops like 60 to 80%. And that hasn't happened yet, right? Say what you will, that has not happened yet. And so I would signal here. Let me turn it on. So this one we show you right now. Okay, this might be a little bit too crazy for you. Let me just take off some of these guys. So this is a plugin I built that tries to analyze financial conditions in the market. So whenever the green marker is showing, it means it's a period where money is flowing into the market. And when it's red, it's flowing out. Now, I built this I didn't build this for Bitcoin. I didn't build this for any particular thing. I just looking at different data sets and built this out. And it just so happens, Peter, tell me that doesn't look like it matches exactly Bitcoin, the rises and falls, right?
Well, you're going to have to explain it to me.
So over here, you see where it changes from green to red?
Yeah.
So crypto was going up this whole time. And then when this changed from green to red, now we had this down period, right?
Mm-hmm.
And then it was choppy for a bit until it switches from red to green. And then when it switches from red to green, boom, it skyrockets. And then again here, green to red, it falls. We have it here. Well, here was a choppy area because we went to COVID. But over here, we have the period here, green to red. So I only built this plugin like later on. I built this plugin like over here, right? And so poor Tommy didn't have the signal. But if I had the signal, it would have told me that this run
drop
up
is coming.
would not be sustained. In fact, it told me sell here and then sell. It would have told me sell here and sell here, literally at the top. And because there was no more of these green markers, it would have been a good idea to sell. But not only, I mean, we've been getting sell signals on this for quite a while here. Let me just drawings. So basically, since July 21, it's indicating there's a problem with the market, and it really got bad. It got worse over here in November 2021, and then since then we've been going down. So then the question is, how low can we actually go, right? So this we just talked about the seasonality. Is there rain? Is there a drought? And then I built something else that allows me to get a sense of the currents in any given the cycles in any given thing. So I'm not gonna. You see these pink and purple lines here, Peter? Actually, let me change these markers. 1 second.
And this is a plugin that you made. It's not available to the public.
It is not. Maybe I might make it available to people if they want to give me monies for it. But right now, I just keep working on it. So you see this pink line and this purple line?
Yeah.
So these are what's called, anyways, they're moving averages. They're the averages of these prices adjusted for the amount. Anyways, they're averages for the prices. And there's a bunch of stuff that goes behind it, but all that really matters here is that you see here, over here, second, where the purple line crosses below the pink line.
Mm-hmm.
That's a sell signal. That's a warning signal. So when that comes on the heels of a red one, the red one gives me an early indicator of like, okay, things are going bad. This tells me no, things are going to get real bad. And we see that happen over there. We see it happen. But then when the pink line crosses back above the purple line, it means it's good. So we see here the purple crosses above the pink. And then we have this bullish. So that bullish signal, that signal to buy happens way before the financial conditions change. Does that make sense?
Yeah.
And so,
So
as
you're
we go
about
forward
to
over
explain
here,
to us your reasoning why Bitcoin is going to fall to 14.5.
yes, technical reasons, yes.
Mhm.
I already talked about the idea of the state of the economy and state of inflation, and that people don't have enough money to spend on things, so that automatically brings prices down. But then now we're talking about how do you then decide when you want to get back into something. So I'm just telling you what I'm paying attention to. I'm showing you how it's affected, how the information has worked in the past, and before I tell you this is what now I then see for the future. So over here, um, uh, we have over here. So basically, we talked about before the lines cross. So over here, we have that crossing. So over here at the purple line crosses above the pink line, and it starts, and it happens really right at the same time as my other plugin tells me that the financial conditions are good, and it was so good it just skyrocketed. Right, it just blew out of the water. And so now the purple line has crossed below the pink line. Now, when this happens, it's you usually have a drop of about 40% over 7 weeks on average. And so 40% over 7 weeks would give us something like, um, it's exactly where we are right now. Exactly where we are right now. So it's possible that we get that this is the bottom of the price where we are right now. It is possible. It can
Right
go
now
up.
we're at 29.2.
Right now we're at 29.2 exactly. So it is possible that this is the bottom of the price. However, when I take a look at, so let me just add some other things over here. So bond yields volume. So what happens is
This is a plugin that you're pretty proud of.
yeah, I can say I'm pretty proud of the plugin. It's pretty good. I like what it's done so far, and I think it'll help me again in the future. But we'll see. Right? I only made it a couple of months ago, and so I've been learning how to read it. So what happens is that all right, let me actually zoom in so you can see here. We'll go to the hourly. Now we're just zoomed into the chart a little bit. Give me a second for the plugin to show up. 1 second here.
I think Adrian got a kick out of your.
Right. Okay. Sorry, I'm just trying to find. Where are you?
Tom has been working on this plugin, and it tells him when things are going to go up, go down. If it wasn't for this, I'll tell you this: if it wasn't for Tom for what you were doing while Tom is looking for this, I'll talk. If it wasn't for Tom and our last stream a month ago, where we talked about the crash proof, how to profit from the upcoming crypto collapse, I would be very stressed today, but we were able to exit and take our cash and just wait on the sidelines. I'm not done with crypto. I love crypto. I think it's the future, but having cash on the side to be able to buy back in, very very useful. So the reason I tell you this is that it's kind of cool to have Tom and to have this information on this channel, and we're trying to tell the world, and maybe we're not making as much traction as possible, but I'll tell you this: the warning Tom gave us back then was very useful. I'm very happy. My partner is very happy. Our newborn baby is very happy, and I'm looking forward to getting to the bottom or anywhere close to there, so we can buy back in. Very exciting.
All right, stop talking.
Adrian,
Get back on
wait,
me.
hang on. Adrian says, I didn't listen for the third cycle in a row.
Yeah.
He says, we got another comment here. I'll be listening to Tom's advice far closer. As well, not financial advice. Not financial advice.
I just tell you what I'm doing.
Tell exactly. Wow. I'll tell you, Tom, when I maybe I'll just tell you this real quick. I pointed out to Tom about ApeCoin today. I take a look at ApeCoin, and it's up 40%. And I tell Tom this, and his face goes white.
because I had just sold, I had just covered all my positions and gotten out of it because I was shorting it, which means if it went up, I would have lost money. So I got out of my positions, and just a couple hours later, if I had not been out of the positions, not only would I have lost all the profits I made, I would have owed money that
All
I
right.
didn't have. Exactly. That's rough. I would have been with those lunatics, just where's the euthanasia clinic and like the right.
Oh.
All right, so what we're looking at now, so Bitcoin is a young asset. It's only been around since 2012, really. So my script needs more history in order to give better advice. And so right now we're just going to take a look at the S&P, because the S&P, I have this chart goes back to the 1980s. And what you'll notice here is that we're seeing the same green and red arrows that indicate the financial conditions, the amount of money flowing around. Now, keep in mind that those red and green arrows are not dependent on the chart we're looking at. They'll always look the same on every chart because it's just saying that during this period of time, it's been weakness. And as you can see right now, green. When you see green, you have a bullish movement in price. When you have a red, you have some chop and problems. Um, my script helped me help call the would have helped call the COVID crash. It would have helped call a bunch of things, a bunch of issues. But and it's been signaling just Peter, this top over here. So I don't know if you remember, Peter. I told you this. My signal's been telling me this whole period that because I built this one some months ago, and so it's telling me there's problems, there's real problems. In fact, if you let me just gloat a little bit here, Peter, I don't know if I'm going on too long. I'm going to show you here. So the red and green are just the beginning of it. There's also these pink and anyways, these other symbols that are on here, and it was telling me. Let me see here. So, for example, before the COVID crisis, my signal was saying, "Hey, buddy, there's a problem. There's a real problem. You got to be careful." In fact, it's been same thing problem for a while. It's like, "Hey, you might want to be careful." And then it collapsed after that. For before the global financial crisis, let's say, over here it says, "Hey, this X that you see here. Can you see that?
Yeah.
This X that you see here in this cross, it said, oh, it's a problem." And you notice how these X's show up like at right at the peak, at right before bad parts. But also the blue crosses. Let me show you that in a second.
This is what Tom does all day. And
These
when I
blue,
call him for information, he just shows me this stuff. And I have to nod
the,
my head and go, mm-hmm, mm-hmm. Do I buy, sell, hold?
these blue crosses show up near bottoms of things when whatever crisis has sort of abated a bit. So when you have these bottoms, you have these run ups, and it happened here too. And so it's been telling me. I mean, it even told me at the end of March that it was going to go up for a bit. I was like, "Why is it going to go up? I think it's going to crash." No, it went up for a bit. So I like how it what it says here. But we're going back to the cycle. So the currents here. So you see these colored lines. What happens is that when the crises happen, do you notice how the price often comes down to one of these lines? Right? It hits around these lines. So, for example, over that was the volume again in 2018. The stock market crashed to this what I call a lifeline. This yellow one over here. We have here the near crash in 2016. It happened. It passed through and almost got the yellow. It's just that the crisis here was in Europe, not in America.
It's funny. You call these crashes. When I look at it, I see a little line that goes down. It doesn't seem so dramatic.
Oh, it doesn't seem very dramatic to you then. Okay. All right. All right. Imagine, so this is the S&P at 3,000. So if you had to sell, someone over here lost 20% of their money.
Hmm.
In COVID here, someone might have lost 34% of their money, right? So if you're living on, you're retired and you're living on a certain fixed income, and then all of a sudden you have 30% less money. Your paycheck's now 30% lower. How do you think that affects you? That's pretty dramatic.
Yeah.
And that's for mom and pop. Imagine you're a hedge fund, right? And you're levered 3 times your money, and you're expecting it to go up because it's been going up for a while now, and you're like, I'm not expecting a big drawdown. My the way that I'm doing it, I could suffer a 5-10% drop in price, and it shouldn't be a problem. But at 30%, you end up with the lunatics from Luna blowing your brains out because you lost your entire company, you know, um, or the earnings for a given company. If your earnings drop 30%, well, you can't keep your same staff, Peter.
Mm-hmm.
If that's persistent, you can't keep it. Or what if you don't even know if it's going to recover, or how long it'll take to recover? What are the effects as an uncertainty increases, which is another word for volatility, uncertainty? Well, then you got to make decisions expecting that it could get worse from there. And so there's this snowball effect for these little tiny drops, these squiggly lines, as you call them. It just drops a bit. It's people's livelihoods that can be deeply affected.
Of
So get
course.
serious, Peter.
Okay, good. I'm serious now. I get it.
Right. So basically,
I want to
the
see Bitcoin now. Tell me
yes,
why Bitcoin's going to get to
yes, yes.
14.5. I'm
So
very proud of your plugin and
the
your
worst things
purple.
are, the further the squiggly line goes through the different levels.
Mhm.
Now we're gonna get to Bitcoin, which I was just about to get to before you interrupted me. Let me show you over here. As we get to Bitcoin, Bitcoin cross this level, this pink level over here. So now we're in free fall territory. And prices fall until they find until there's no more sellers, and until there's no more sellers. It gets to a zone where there's buyers. So over here, if you'll notice, let me just open this up a bit. Um, my apologies. You can vamp for a second. Oh,
All right. No, it's funny.
never mind. I got
I
it.
can tolerate Tom doing this because at the end of the day, I make money. So pretty happy about it. Tom, you take all your times with your stupid little charts.
All right, let's get back to it. So what you're seeing on the right side over here with this yellow and blue bars, that represents that at that price, there was that amount of buying and selling. Now, if you don't understand histogram bars, I don't know what to tell you. Invested in crypto or the stock market, not for you. Turn off the video, go do something else. Do I care about offending them? No, because they're never going to pay me. They're never going to do anything for me.
Oh
All right, go on Khan Economy and shore up your knowledge. I'm just spitting facts here, Peter. I'm just spitting truth.
All right. There are more.
So over here, these bar, exactly more trading. I'm sorry. I switched to Tom Vizé. Did I? Do you understand histogram bars, Peter? Do you
No,
understand what these bars mean?
no. Look, I don't need to understand histogram bars. All I need to do is understand English, and I'll have to wait for you to tell me buy, sell, or hold. That's it. That's all
Sounds
I need
good.
to know. You're the
All right.
sucker who's like analyzing these charts day in and day out.
So the bigger the bar, the more trades were happening at that level, at that price. So if a lot of people bought at that area, chances are there's people who, if they liked it at that price before, chances are they'll like it at that price again.
Mhm.
But if the price goes through that, falls below it, that means the people who bought it then at that price are now in the red, right? They're losing money. So as we saw over here, this is the Bitcoin price. This is the Bitcoin chart. Over here, the Bitcoin price was at 38,000, and it stayed around here for a bit, but then it started breaking. So all these people over here, are now losing money. So these people start selling, and as they start selling, it adds to the selling pressure. And now we're over here in this area over here, where there's not a lot of volume, not a lot of buyers. It's like
Mhm.
an air pocket.
So that could be the bottom.
It could be, right? It could be. However, when we take a look at the price it is right now compared to this run up that we had before, this run up was directly caused by the the U.S. government printing, or all the central banks in the world printing so much money to help with the COVID, that so much money was sloshing around, and so it's reasonable to expect that a significant portion of this will pull back in the same way that we had this pullback, right? So over here in 2018, it peaked out at 20,000, but it bottomed over here at 3,000, right?
Mhm.
That's a massive drop. That's a drop of 83%. Over here, when it dropped in 2014, I believe it dropped. Let me just get rid of this.
Your histograms are getting in
Yeah,
our way, Tom.
let's get it in our way.
You might want to go to Khan Economy and figure out how to clean up your monitor
I'll end
screen.
this stream right now, Peter. You just watch me. So over here in 2014, from the peak of 1200, it dropped to 150, 86%, right?
Hmm.
Similar. And so the drop, and let me just check here what the COVID drop here was. Here, and for the COVID drop, the peak of 10,000, I think, or 13,000, and it dropped to 70% to the COVID lows. And so we've only dropped from the top over here. Even if we get the low of the 25,000 from last night, it's only 63%.
Hmm.
Right? It's not even proportional to the other drops. It doesn't even compare to the most amount of money printed ever. And so 80% brings us right, Peter, look at that beautiful. 80% brings us right to Tom's yellow squiggly line. Now, I wish you had the patience and the intelligence for me to explain to you exactly how these squiggly lines were chosen. They're not just random moving averages, but suffice to say, there are a number of things that lead me to believe that 14,600 as of today is the actual low for it, which would make sense. It would be very near to the peak that we had previously. So it'd be very near this peak of the previous cycle. And that's what often happens when the price falls. It falls like towards the peak of the previous cycle. So it would make sense that there's a lot of buyers over here, and that this would be a price to settle at. It would get through all this stimulus money, all this extra money sloshing around. To me, it makes a lot of sense. Now, I wouldn't have believed it before. I didn't believe it before, right? Hell, at 69,000, I didn't believe it. I was saying it's going to go to 120,000, like the idiot that I was. But now I see clearly that Bitcoin will fall, right? And so, fine. If it bounces from over here, and this is the end of it, who cares? Because if this continues the way it should, which Bitcoin is a function of its network effects, of its adoption rate, well, then this should continue, and at the peak of the next cycle should be somewhere along the lines of like 120,000 and more. So who cares if I miss it here at 30,000 and I buy it later on at 60,000? Peter, I'm fine with doubling my money. Are you okay with doubling your money?
Look, Tom, I'm not in the crypto space to freaking double anything, all right? To the moon, a Lambo. If I double my money, I don't have a Lambo, all right? I don't even have a Tesla. All right?
Peter, you should probably buy some Luna right now. Then you could probably get it at a pretty good price.
It's dirt
And
cheap.
yeah, half a penny I think you could get, and that could skyrocket.
That's great.
I don't doubt some people might do that. They might do that, and they might actually make a killing. But we're not in the business.
Why shouldn't we throw some cash at Luna then? I mean, who cares?
People said that. I saw people who bought Luna at $3, right? Because it crashed from 119 to $3 the other day, and like, oh man! And then they took up 20 times leverage on that at $3, thinking it can't go any lower than that.
I don't leverage anything.
And then they're down. I saw someone was down 300,000% no 30,000%. Just an insane drop. Just and crazy.
Okay, but it's not going to drop from half a penny.
People thought that when it was at a penny, Peter. It dropped half from there, 50% from there.
Okay, so someone has $5,000 in Bitcoin, or they put $5,000 in. Maybe it's down now a good chunk. What do they do? Do they buy, sell, hold?
So if you need that money at any cost, it's hard to say, Peter, right? Because crypto was always a risky bet. So assuming that, let's just assume you go, okay, crypto could go to zero because Janet Yellen wakes up one day and says it has to go to zero, and Biden presses the wrong button, and instead of destroying Russia, destroys crypto, whatever it is. Okay, so putting that to the side, let's just accept that can happen. If you were to just to treat any asset, it doesn't matter if the stocks in your portfolio are down, doesn't matter this, or you go, are the conditions still there that the adoption would continue with Bitcoin? Yes. There's still a reason for people to buy it, still people for people to use it, just like you were saying, there's a use case for it. And so, since the price is a function of the number of people who purchased it and the amount of trades that they do with it, how they use it, chances are it's going to go up. So, if it's going to go up, then the question is, how long of a period is this, right? And so, the periods of abundance and drought that happens in the financial markets are due to what the banks are doing, what the central banks are doing. Is there credit being created? Are they going to be lowering the interest rates? Are they going to be doing things in order to stimulate the economy? So if you're just looking for a time period, chances are the stock market's pretty down right now. It'll go down more, but the government's not going to. I mean, Biden's going into an election. You think he wants to be going into that with the stock market crashing? Freaking no, okay, not an election, the midterms. So
Mhm.
what'll happen is that there's going to be a period of time where it'll be beneficial for politicians to turn on the money spigots, and that period is never more than 4 years, like basically every election cycle.
Won't that increase inflation and
Doesn't matter,
exacerbate the
people. If
problems?
you they didn't care about that. The 2019, 2020, they turned on the spigots. You know how many people were saying inflation's going to go through the roof? What are you guys doing? Like, just turn it up. Just turn it up, buddy. Let's get
But
that
isn't
money.
inflation one of the reasons the market, the whole market, crypto, stock market, is in free fall right now?
No, it's
But
a
I
myth.
thought after the Fed chair let spill that he was going to be softish, that they weren't going to be increasing interest rates, that the market first rebounded, then dropped.
Look at the game we're in. The financial markets game is a game. It's a confidence game. The whole thing's a confidence game. It's about what you believe and what the majority of people believe. When I've shown you the chart right now of the different squiggly lines, the lines are not telling me what really is. It's telling me what people think over time. That's all that really matters, and that's all you really care about because you're buying and selling something because of what people think. So the I mean, I'd love to do a whole thing about inflation, Peter, but essentially, if if there was massive inflation, then wouldn't inflation sensitive assets go up drastically in price? Wouldn't bond yields be at 20%? Wouldn't gold be at $5,000 an ounce? Wouldn't Bitcoin be through the roof? Wouldn't housing just keep going up? No. What we're actually in is deflation, right? It's just that sometimes deflation looks like inflation, right? So deflation is the opposite when then the supply of something is reduced. So because there's not enough dollars around, right? People think, oh, they're printing money like crazy. They're printing money like it's not. Even though I use that vernacular, they're not. That's not really what's happening. What's happening is that there's a shortage of dollars because the entire world needs American dollars, US dollars in order to function. And when
Mhm.
there's not enough of it, well then businesses there's a lack of investment in businesses, a lack of supply, and if there's not enough of something that you need, then you need to pay higher prices in order to get it, right? The price of oil is going through the roof not because of inflation, but because there's not enough oil flowing around because of the Russia embargo that the price of oil goes up, but they call it inflation, but it's really deflation because
Mhm.
deflation can cause prices to go up just as easily as inflation does. And it's just that it's hard to tell the difference. There's a benefit for the government and the central banks to say that it's inflation, because if they say the other way, then they have to admit there's a dollar shortage. There's not enough going around. There's a problem. It doesn't matter how much money we print. It's still things still keep going down, and it's an issue. And the thing is, it's an issue that exists for all of humanity because deflation is caused by technological innovation, right?
This is, you sound
The,
like Cathie Wood.
yeah, I like Cathie Wood. I like her much better now that her stock is down to the 30 something dollars. Yeah, it's pretty good. No, what it used to be that you know 80% of people were farmers, 90% of people are farmers. Why don't we do that? Because technology has made it in such a way that we didn't need as many people doing that stuff. Well, in that transition, Peter, between farms and cities, it wasn't like what we have now. You had children in factories and people living on the streets and pollution galore. It was pretty rough. The Industrial Revolution was dirty and rough. There was no labor laws. There was no such thing as I'm clocking out at 5 o'clock. I can't wait TGIF. You worked your butt off until you died. Women
Mhm.
had to come into the workforce. It was a whole thing. Every time you have these technological developments, these revolutions, amidst these evolutions, you have a contraction of money, because the systems have to rejigger in order to make sure that new money can flow around. Which is why I think crypto has come. It's come as a response to that. There's a lack of dollars around. There's a
Hmm.
lack of an ability to get loans, to get credit, to transact. There's a lack of it. There's too much government control and intervention, too much permits and licenses, not enough to go around, not enough resources. So much so that we're inventing NFTs just to have resources. It's just not enough going around. So it's deflation. Um, so what was I saying? Yeah, Bitcoin's going to 14.6. So if it goes to 14.6 and it stays there, it should be, or it's to go down. This period of softening in the market should last about. Uh, it depends when it really starts, but it looks to be uh, about 6 months to a year, maybe a little bit more than that. And the amount of pain in the market when you hear stock market dropped 7% 3 days in a row, and they have to close the stock market because they have to stop people selling. Like when you start hearing that, then you know that the government response will be, we got to do something to help the ordinary folks, and they will. When companies start going bankrupt, whatever, they're gonna turn on the spigots. They're gonna lower the interest rates. They're gonna put out money. They're gonna do whatever it can in order to boost the market, because they don't want it to collapse. They'll do anything to stop it from collapsing, and that they can't do that for 10 years, right? They're not going to let it just collapse for 10 years. Pension funds need this. Hedge funds need it. Government needs it. It's anyways. That's what's going to happen, and so it'll be about a period of 6 months to a year. So if someone's underwater right now with it, and they can hold it, I would say hold it until. Think to yourself, I'm holding it to 2024, and chances are you're going to get back to all-time highs by that period of time. But if you need the money sooner, then you need the money sooner. But if
All right.
you don't have anything, you definitely want to be. Now's the time to sort of like start dollar cost averaging. I would wait till it's lower, right? I would wait till 20,000, 15,000. That's a place you want to be. And then you really want to take a look, not just at Bitcoin, but at all the other cryptocurrencies. And we'll talk about it on this channel, I'm sure, that survived all this,
Hmm.
that were resilient, that actually had use. And that now you can do a post-mortem on the entire situation and see what was actually valuable. And those things should skyrocket in the same way that I think ETH went from like 50 cents to sitting at $3,000 now. Like those are the opportunities you're looking for. Bitcoin is actually garbage compared to the returns you can get in that.
So timing the bottom. If I remember correctly, you told me something to the effect of once it starts going back up, it's going to go back up fast.
Yes.
So can
So,
you time the bottom here? Should you?
well, if you have the yes, because you could place orders. For example, I mean, I'm saying this, Peter, just so that it's out there. Regular retail people are not going to necessarily do this, right?
Mhm.
If you have to transfer money from your bank account to an exchange and you don't even have that exchange yet, you have to create a crypto account and you do all that, and you want to buy, like, it'll take you a while, and the bottom might be gone by then. And but if you're not, and you're just waiting, you have an exchange and you're able to set orders for the future. Well, you can set an order that says I want to buy a certain amount at 20,000 and at 15,000, and when the price gets to that, if anyone wants to sell it that, I want to buy it. You can set an order for that, and then you can just grab it. It'll just be sitting there, and you'll get it when you want to, when that happens. But barring that, well, then you sort of have to. You're probably not going to get 14.6. I think it'll stay there maybe a day or so. It'll just bounce pretty hard, and within a week, 2 weeks, it'll be back like around 20,000, 25,000. So 25,000 is I think a good price to get in at.
So we're going down for the next 6 to 12 months and then a rebound.
Um, No, not 12 months. We're going down. We've already started, so it should continue for until about the end of the year, maybe the beginning of next year, so maybe 6 months, and then that should really be the bottom. And I wouldn't just recommend. I mean, not financial advice, but I would be buying not just crypto. I'd be buying the Nasdaq. I'd be buying tech stocks. I'd be buying Cathie Wood's ARK. I'd be buying um, all those stocks that survive this whole crash, and that you've heard about, that you like, right? If you like Nike, buy Nike. You like Nordstrom, buy Nordstrom. If you like whatever, buy the things you like, because that'll be when there's blood in the water, and chances are it'll go up from there. And if it's going to fall, it's going to fall a little bit, and not for long. And if it falls a lot and really crashes and the whole thing goes belly up, well, you got bigger problems. Get yourself a taser, get yourself a gun, learn how to do a bow and arrow, do something because the zombies are coming.
I'm selling everything. I'm buying Pfizer. Uh, when the president in the State of the Union says the word Pfizer multiple times, pretty sure it's a safe bet. Cardano, what do you think?
So one of the things I like is that one of the things when you see all these crashes, oh wow, crypto's coming down. When you see all these, the bounce we got in the cryptos recently is what we call a dead cat bounce. And what happens is that a bunch of people who are shorting it are selling their positions because they want to get out of it. They want to get out of the stable coins. They don't know what's going on, all that uncertainty, and so it causes huge run up. So you want to fade this. You want to don't buy it now. Just don't buy it now. What was the question again?
Cardano.
Cardano. So you want to one of the things you're going to be looking for. One of the things I'm going to be looking for are those areas within the crypto space that were not infected by the contagion of these Ponzi schemes and over leverage and all that sort of thing. And I believe Cardano will be one of those things. So even though Cardano price dropped from whatever the all time highs $3 to 50 cents right now, it's not. A lot of that was we already knew a speculation, especially between $1 and $3. We know it was a bunch of speculation that was happening over there. Cardano used to be 17 cents, so if we ever get back to that, then I would be like, okay, the project is over. But I'm looking for Cardano around 37 cents and higher. And the benefit for that is that it's a solid project. They're already internally funded, so they already have reserves of cash in order to fund projects for their own development, their own ecosystem. And I think they're going to be in the next wave up a huge contender. I think you'll hear of them literally on the level of Ether. Sorry, Ethereum. In fact, I think Ethereum is going to crash, so we'll see about that. But I think it'll be right up there with Bitcoin and Ethereum. You're going to hear about Cardano, along with some other stuff. You might hear Solana, you might hear about Avalanche and that sort of thing. But Cardano, what I like about it is that you can get a reliable yield, right? So it's not like Luna. You are getting a yield. You are getting like let's say 5 to 7% interest on the assets that you stake. But one, it's not locked, right? You're not locked into anything. You can sell those assets whenever you want to. And two, the what you're getting back, the interest you're getting is because of you're helping to secure the network. So in the same way that people who mine Bitcoin get Bitcoin as a compensation for securing a network and processing transactions, the same things happen in Cardano. So you are actually pledging your coin in order for the network to actually exist. In the same way that someone might buy shares of a company in order to support its development. It's just your skin in the game for that. And so I really like it. The price point is great. You're not buying something that's $500, $1,000. You're buying something that's cents. And so to put $5,000 into Cardano at 50 cents and being okay if you lose that money, but potentially making 6 times your money in a relatively short period of time, and beyond that, maybe even 100 times. I think that's a fantastic bet to make, and that's something you're really even going to get with Bitcoin at the moment.
Exchanges. Are they safe? All the problems about getting your money off of exchanges. I mean, I took my cash out of Kraken. Are they
Yeah.
safe?
So no, exchanges were never safe. They were convenient. You exchange the convenience of the exchange for the lack of security. Because what happens is that you probably heard the phrase "not your keys, not your coin," and that means that it's sort of like people found out in other countries, and we might find out in our country that you think I own gold. I bought gold, and it's inside a vault somewhere, instead of a safety deposit box at the bank, and that gold is mine. And I have it in an emergency in a pinch. I can go get that gold. Yeah, well, if there's a bank run, right, and the bank needs to take your gold in order to pay stuff, it's a confiscation of it. If there's a problem, you can't get to it. Well, that goal is not any more yours than if it was on a boat in the middle of the Mediterranean. And so the exchanges, it allows you to facilitate being able to quickly change your cryptocurrencies for money, or to trade it for another cryptocurrency. But when push comes to shove, if it turns out that that exchange is not solvent, as we found out with Coinbase, one of the biggest, it's even on the stock exchange. They just released a notification, a disclosure recently that said clients of ours who have the cryptocurrency held with us, we hold them. They're literally in our names. You just have an IOU with us. And if we go into bankruptcy, there is no guarantee you're going to get your money back. Are you kidding me? If you go bankrupt, I lose my money. That's rough.
So that's
right?
whether you have crypto or cash in.
Yes. That's right.
That's
I
when
don't
I
know if the
took my.
cash.
When you told me that, that's when I took cash out of Kraken. I was like, I thought having it in cash was safe. I was like, let me get it out of there.
Well, you don't know, right? So even if they say it is, or let's say it's covered up to a certain amount, do you want to be in a situation where you can't pull anything out for 6 months while they're trying to figure out what's going on? While they're trying to figure out, or maybe they'll pay you, 50 cents on the dollar instead because it's a problem. Uh, Someone decides that they're going to abscond with the money instead. Like you don't want to be in that type of situation,
Mm-hmm.
right? We're already taking a risk being in the crypto space altogether. Why compound that by letting Bernie Madoff hold your money? When Bernie Madoff starts off his shop, hell yeah, go to Bernie Madoff, get that Ponzi money, get that, trust them, do whatever you need to do. When some people goes, when you start going, hey, the Fed, the FBI is like poking around Bernie Madoff's office. Well, sell your Bernie Madoff stuff. What are you trying to do there? Just take your money out. And so for exchanges, the way I see them, you really just want to use them to quickly on ramp and off ramp. On ramp and off ramp. You just want to get in and get out, get in and get out. You don't want to be sitting around there and being like, that's my nest egg. Don't do that.
All right. So it's not only not your keys, not your coin, is if your cash is in there, not your cash either. Interesting. All right. So we talked about crash proof. Tom gave us some predictions a month ago, warning us that red moon was rising, and
right.
Boy, was that true. Um, I don't know what the Feds are going to do. You're saying the Fed is going to start cutting rates in response to the market, maybe 6 to 12 months from now.
Yes, I was looking at the inflation print for because the Fed since the Fed has no control, really, they can only control what people think. They actually do what the market tells them to do, and they pretend like they're the ones who said it.
Mm-hmm.
So they go, we're being data dependent, and we're observing the state of financial conditions, and if it's necessary, we will be accommodative in order to support financial markets. And then the markets cause a conniption and says, Fed, you need to do this right now. And they go, okay, well, we're going to do it just like we told you we were going to do, but they're just doing what the market told them to do. And everyone goes, oh, the Fed came to the rescue. And so what happens is that the Fed is in a situation right now where for over a year they were saying that inflation was transitory, that inflation wouldn't last, and blah blah blah. But as I said, Putin effed us just like they effed the Federal Reserve, and then it turned out they had to be aggressive and start. The market was already pricing in rate hikes for interest rates, and then so the Fed had to do the same. So the Fed is going to want to cut interest rates, but they can only do it when there's some data that they could point to that says things are getting a little bit better, or that they should not better, worse, but that they should do it. And so I was waiting for the inflation print this month, the monthly data that comes out for month on month inflation, and if it had gone down lower than expectations, then the Fed could be like, aha, we did it, inflation is lower. But since that didn't happen and it went up, then
This was CPI.
CPI, exactly.
And it was at 0.6, and apparently that was higher than what people expected.
Actually, core CPI I think was at 0.6.
I see.
CPI is at 0.3, but core CPI was at 0.6. But yeah, it was higher than expected. And when it comes to markets, when it's all about calculus, it's all about the rate of change. You need is the economy accelerating or decelerating? That's all that really matters. The number doesn't matter. So going up or going down. And so since it was going up, well, they can't cut. They have to wait till there's a piece of data. Either they have to wait for a piece of data that says things are turning in the way that they said that it should to make them credible, or things have to get so bad that they have to pivot. And so we don't have that yet. That hasn't happened yet, and so there is no reason to believe that the beatings will not continue.
Until morale improves. Exactly. This has been a lot of fun. We're approaching here an hour and a half, so we're going to have to get going soon. Thank you so much for everybody who's watching. Thank you, Adrian, for commenting there. We got a price target for Bitcoin at 14.6. We've got a price target for Cardano, 37 cents. I think that's more of a hope than it is a prediction. Are you predicting it'll be 0.37, or are you just waiting
That's
to
the
see
lowest I think it'll go.
Okay. 6 to 12 months of pain, and then we'll get some pleasure. We're going to be some pleasure delayers here. Get your money, get your stuff off of the exchanges. Gold.
Yeah, oh my God, gold. Yeah, gold should explode. So I won't show you the chart of gold, and let me just double check here, make sure I got it right. Well, do you want me to show you the chart, or should I not?
Sure.
So if we use our signals for gold, let me just let it load. So gold moves not because of inflation, like people keep saying. I'm looking at you, Peter Schiff. Gold moves because of uncertainty. The more uncertainty there is, where even cash becomes uncertain, people go into gold. And so
The gold's only at 1823 right now.
Hey, it's almost at my target. I tweeted out the other day a bunch of targets for different things, for different price levels for things, and I said gold 1820. I think it'll bounce around here. Give me 1 second. Why aren't you showing? Oh, right. All right, there we go. So, oh, that's a bearish signal. All right, so gold. Let's see here. So gold could fall in a liquidity crisis. Anything that's valuable gets sold, right? So what'll happen is that we'll have a big drop. So here in COVID, it dropped and gold dropped as well. In the global financial crisis, it dropped as well. Gold also drops in a crisis. And so what we'll see is that we should see gold drop significantly, just like the S&P did, and just like all those Bitcoin did. But what'll happen is that it won't drop. It shouldn't drop as far, and then it should bounce. And after that, it should skyrocket as it's dealing with the uncertainty that's surrounding the financial markets.
Skyrocket meaning what?
It can go to 3,000.
What?
Yeah, gold could go to.
People are going to be getting tattoos of Peter Schiff soon.
Look, before the .com crisis, gold was at $285. Right?
Mm-hmm.
By the end of the .com crisis, it was at it doubled to 445. Then at the beginning of the global financial crisis, it was around let's see here, let's call it 600. By the end of the global financial crisis, it was at 1,200, so doubled. It still won from there. It gave back all it sold off, and then before COVID, it was around 1,200, and then it went all the way up to 2,000 after COVID, so almost doubled. And so at the next crisis, it should double from here. It should go from 1,800 to 3,000, 35. I was being conservative for 3,000, 35, 3,500, 4,000. Absolutely, why not?
So buy gold.
Oh yeah, definitely buy gold. 1820 was my price target, but it could drop, right? Like I said, in the crisis, it could drop, but you're not really going to have much time to finagle around with that, depending on who you are. And look, I wouldn't be surprised if it went down to 1,400, down to this lifeline I was telling you about. It could even go down to the generational line of 1,300, but I doubt it. And if it does that, I don't think it'll go for very long, but we'll see.
Gold ETFs, futures. What's the deal?
So if you want to do gold spot, so you can do physical gold, right? If you want to hold it, you can do especially like
you want to trade physical gold. That's difficult, no?
No, not really. It's just slower. In fact, sometimes you get a premium because people will pay a premium for the physical thing, and certification and all that. The paper gold, you never know. It could be that the company that you're buying the gold from is insolvent. We haven't seen that yet, but there's rumors floating around that that's the case, so we don't know. There's gold futures, there's gold stocks, there's gold ETF. There's also gold miners. Gold miners allow you to not only to get the benefit of the price movement in gold, but it can actually be a multiple of that, right? So where gold might go up 100%, a gold miner might go up 300%, 500%, which we saw in the COVID crisis, right? We've been, I was in a stock once. It was at I got in at 50 cents, and then I was able to sell the share at $3, right? So 600% increase, even though gold didn't move as much. It takes some finesse to know which gold miners are worth getting into. There's people out there who are professionals who focus on that. I have mine that I really like. I'm not personally invested in them right now, but I would be interested in them in the future. If anyone else is interested, I'm happy to charge you for the information, $29.95 per month, and you can get my list of gold miners. And
Pretty sure we talked about gold in previous episodes.
Yeah.
Yeah.
But if you don't, you just want to be safer. You want somewhere to park your cash to be safe in the next crisis. You could put some money into GLD, the gold stock, or the miners in general. GDX is the ETF for just a broad range of miners. And if you want miners who are junior miners who are a little bit more gambly, a little bit more potential high return, JDXJ. Yeah, JDXJ.
So Max Kaiser and Michael Saylor were
GDX and GDXJ. Sorry.
So Max Kaiser and Michael Saylor were right about shitcoins. Just all gambling. That's all it is.
Yeah. Well, shitcoins, yes.
Well, they consider everything besides Bitcoin to be a shitcoin.
Yeah, that's ridiculous.
Is it?
There's live peer. There's a token based on a video processing on your computer. This BTT for BitTorrent files. There's a BAT for the Brave browser. For in lieu of advertiser dollars, you can use this in order to reward content creators. There's all kinds of tokens out there. Rally tokens that are there for to facilitate a social structure for a social ecosystem for people. There's tons. Peter, there's all kinds of stuff. But is there 95, 99% garbage out there? Yeah, of course there is. But as I've said in previous videos, actually for a couple of years now, don't be afraid of the Ponzi scheme. You're in a Ponzi scheme now, whether you're in crypto or not. Your money is in the Ponzi scheme. Bonds are in a Ponzi scheme. It's just that those Ponzi schemes are backed by guns and the Internal Revenue Service and the Canadian Revenue Agencies, right? So there are Ponzi schemes everywhere. The question is, how do you identify, are you the dupe at the end of it? Or are you not? Get that money.
All right. I want to end here by saying, I want to ask you something.
I'm just going to leave right now. Excuse me. Just end it. Just end the stream.
Raoul Powell told us there are no gurus when it comes to crypto. And
boy, was he right.
Boy, was he right. But that doesn't, so I don't know if you want to touch on this or not. We don't have to talk about it. The 3 million that became 15 million.
No, it's too sad.
It's too sad. All right. There are no gurus, people. I call Tom a guru. There are no gurus. Although Tom's signal is pretty special. But we'll see.
And I can show you the rudimentary version. There's all kinds of different features and stuff that, like I said, for $29.95 per month, you also can be a successful trader.
We got Adrian here saying, thanks, fellas. This was great. Thank you, Adrian. And yes, thank you so much, Tom. This was fantastic. Adrian
is from the blockchain and the blockchain and cryptocurrency Telegram group. You can find them on Meetup. Sign up; it's free. We talk there all the time. We're going to be starting our own Telegram group, our own Meetup, but that's a great group, and it's been just fantastic to interact with them. Go check it out.
We'll post their link in the description or the comments below. Is that okay with them?
Sure.
All right.
I'm sure he won't mind.
We have a lot of fun in that group, can talk and see what's going on. I wake up and there's blood in the water. I'm like nervous, what's going on? This conversation has really helped me. This is going to be short-term pain. But if you believe in crypto, if you believe in Bitcoin, if you believe in technology, it is something that's real. It's something that's good, and it will come back. We're clearing out 99% of the riffraff, of the Ponzi schemes, of the people who are over-levered and people, all that stuff. And we're going to be going back up. So I like hearing the optimistic message that although we're in a crypto winter, crypto Armageddon right now, that things will get better. If you haven't come out by now, well, you should have watched this. And what you should also be doing is following Tom Hartman, aka the Sacred Prophet, over on Twitter at Sacred Prophet over on Twitter, and you can follow me at Bad Guru, and I am Bad Guru. What I do is I just comment on Tom's tweets. That's all. If you're looking for financial information for me, it's just memes for me. But Tom's got some good information there, and I think you'll be sharing more, especially with the signal that you got going on. You'll be keeping us up to date on your predictions. It's good. I've got the bell notified for Tom's tweets. Now I get them. I don't have to wait for our call to catch up together. And it's good to get that information. So Sacred Prophet, you're definitely going to want to check that out. And there's going to be some really cool stuff coming soon. We've got a project, the crypto project, that's going to be hitting the airwaves in the next few weeks. So you're not going to want to miss that. I can't tease it too much. I feel like we've been kind of holding back on saying what it is because it's such a novel idea. But it's something very exciting. Oh, we've got the JC who's here. Thank you. This has been helpful. Thank you, JC. That's so kind of you to say. Thank you for watching. If you liked what you saw here, subscribe to our channel. Feel free to share this video. We'll be releasing clips and all that stuff. And follow us for more. This has been fantastic. Tom, anything left to say?
No, I've been pretty good. I've been pretty impressed with myself. So pat on my back. Yeah, you've been okay, I guess.
Look, you've got shirt tails. What are they called?
Shirt tails.
No, I'm hanging on to your skirt tails.
Coattails.
You got coattails, and I'm just hanging on for dear life, baby. Just hanging on for dear life. Drag me with you. This was a lot of fun. It's exciting. You can't deny that what's happening is not exciting. And if you're not leveraged, right? If you're not like then what's if you're not leveraged and you're not retired, then I think this is a great opportunity in order to make a lot of money. The money is really made in these moments right here, right, Tom?
Absolutely.
All right. My name is Peter Hartman.
I'm Tom Hartman.
And you're watching Jumpstart Live. Thanks for watching.
Did we get any of that?